very good morning, guys. While we were sleeping this weekend, the rest of the world fell apart. Friday night, Wall Street cracked. The Nasdaq dropped 4.18%, S&P down 2.64%, and then Asia woke up this morning and joined this week's selling rally. Japan is down 4.17%, Korea is down 6.15%, Taiwan is down 5.08%, Hong Kong, Jakarta, Shanghai all red, and on top of that, crude oil has jumped more than 3% overnight. Brent is back up to $96. So the whole world is dumping stocks and buying oil at the same time. Our markets did nothing wrong on Friday. We are about to open sharply lower this morning, not because of anything that has happened in India, but because everything that has happened elsewhere. So this is the Tanmay Edge. You are listening to episode 55. I am Tanmay Gurtagoti. Let's go. One line on Friday before we trade. 3 out of 5 calls landed. The full scorecard, every level and every number lives on the website. Today is the only thing that matters now, and the weekend has changed that question completely. Our gift nifty is sitting at 23,137 as I record this podcast. Friday we closed at 23,366. So we are looking at a gap down of roughly 230 points at the open. That drops us straight onto a very specific battlefield, because today we open between two lines. Below us at 23,000 sits the heaviest pile of put contracts on the board, 92 lakh of them. That is the support, and that is the floor everyone is watching. Above us, the level we just lost, 23,300, that has 74 lakh put contracts that now flip into resistance over our head. So that is the resistance, and 23,500 above that level is the call ceiling that capped every rally last week. So we open in a tight box of 23,000 to 23,300, and that entire day is a fight over which edge breaks first. And here is what the options market itself is saying about the size of this fight. The cost to bet on a move either way into tomorrow's expiry. The straddle is trading about 280 points. Multiply that and the market is pricing the whole week to land between 23,000 to 23,500. Read that carefully. 23,000 is not just a support level, it is the bottom edge of the entire range. The option market thinks is even possible by tomorrow. Lose it on a closing basis and the floor has to be repriced lower in real time, and that is the level we are going to watch for today. So 23,000 acts as an important support for this week's expiry as well as the positioning to have today. And the volatility itself was fast asleep. The fear gauge India VIX closed Friday at 15.79. The 1 week expected move was priced under 13%. That is extremely cheap. The calm before the storm has arrived. On a Monday morning like today, that number does not stay down, it spikes. So there are two trades inside this day. One direction, the bias is to sell on rise. More on that in a moment. On volatility, you are a buyer of the move, not a seller of premium. Remember this. Here is the part and should genuinely worry you today. And the reason I am leaning the way I am is look at how far the rest of the world has already fallen. Korea down 6.15%, Japan down 4.17%, Taiwan 5.08%, and look at us gapping down barely 1%. We have not caught down yet. India walked into this weekend more crowded, more expensive, with the foreign desk already heavy short. The combination does not make us safer than our peers, it makes us better set up for a fall, because we have the most room left to travel down to meet them. A 1% gap against a 6% route is not a protection, it is unfinished business. That is why every bounce today is placed to sell, not a reason to relax. Sell on rise continues, but 23,000 is that level we are watching for. Now, who walked into the morning positioned right and who is trapped? Let's look at that as well. This is the part that matters. So let me give you the actual book. The big FIs are net short the index futures by 267,000 contracts, the heaviest of the entire run, and they added it on Friday even after the banks held up. And it is not just futures. On index call, they are net short around 276,000 contracts. Betting the upside stays capped. On the puts, they are net long over 530,000 contracts, betting on the fall. So futures short, call short, puts long, all three legs pointing at the same thing, that is way down. For the once the biggest desk on the screen is standing exactly where the morning has opened up. They didn't predict it. They were just in the right place when the world tipped over. The pros did something smarter. They are net long futures. They are not short, but only about 21,000 contracts. That's extremely small. The real story is in their options book. They are long around 1,81,000 index calls and long around 2,57,000 index puts at the same time. They bought both the sides, calls and puts on the both ends. In plain words, they paid to be in the move. Whichever the way the market goes, they care about the distance, not the direction. And they will get the distance today because we open well below that 23,400 level where the market flips from a long gamma to a jumpy level. So below 23,400, every move gets exaggerated. Today is a moment day, not a sitting idle day. And the crowd, retail, is net long the futures by 2,08,000 contracts. And they spent last week selling puts. Over 8,10,000 contracts of them are net short. Betting the market sits on or drifts up. On a 230 point gap down, this is the wrong side of the boat twice over. Long the index into the fall and short the very puts that are now going to explode in value after the wall is going to go up. Wall is the IV. The only desk standing against the fall is our own. DIS bought around 8,762 crore on Friday, and even as the FI has dumped around 8,360 crore in cash market. So the question of the day is simple. FI money is selling the world's panic into our market. Will our institutions keep catching it till 23,000 or they'll stand down for today? The likelihood is they buy in heavily as we breach that 23,000 mark. That brings me for today's one big idea. A heavy put wall like 23,000 we are about to test in either a trampoline or a trapdoor, and you do not know which until the first half an hour tells you. So here's the mechanic. The trader who sold those 92 lakh puts at 23,000 does not want 23,000 to break, because if it breaks they lose. So at first they will defend it, and the defense can bounce the market hard. Do not buy into the rally. Wait on the sidelines. But if the selling is too strong and 23,000 breaks and stays broken, those same sellers are forced to protect themselves by selling futures, and that pours petrol on the fire that we are already going to see. The trampoline becomes the trapdoor. Same level, same people, opposite outcome. The only thing that decides it is whether 23,000 holds today in the first 30 minutes or not. Watch the clock, not your gut. So here is the plan, guys, and the bias is clear. You sell on rise or wait for 23,300 to be broken on the upside. Step 1, do not catch the knife at the open. It's a falling life. A gap down driven by Wall Street and oil does not need you to be hero in the first 5 to 10 minutes. Let a point low and let 23,000 show its hand. Step 2, treat the bounce as a selling opportunity, not a buying one. You can do either call ratios or buy put spreads. Yes, the foreign desk is sitting on the heaviest short of the run. So any bounce can be sharp because some of them buy back to cover as well. But while we are below 23,400, that bounce is a gift to sell into, not a trend to chase. Sell the rallies into 23,300 and 23,400. Keep your stop at 23,400 because below that line, the sellers own the tape and the FI book wants it lower. Only a reclaim and hold above that 23,400 pauses the bear case. That is where we come into step 3. If 23,000 breaks and stays broken, go with it because the next stop is 22,850 and then 22,500 where the deeper put wall sits. Do not argue with the broken floor. For a smaller account, the moment day trade is your friend. You do not need size. Buy one put of 23,000 if you are riding the fall, or buy one 23,000 call and sell two 23,500 calls now that we have fallen below it. So as a lottery on a short covering, snapback is where you put in call ratios. Define your risk. These reprices the second bell rings, so check them, and tomorrow is the expiry, so we are entering a volatile zone as well. A quick word on sectors as well. So most sectors were already on a sell on Friday. Only pharma and media was green. Into a global gap down, the most exposed ones are tied to the world. IT is extremely negative, as well as metals has broken down. Both already the weakest on Friday. Banks have held up better on a FIS sell-off, and domestic banks are where our own money hides. Crude is trading at 96 and rising. The new worry, because higher oil is an import bill and an inflation tax on us. And gold did not even rally, which tells us you this is the clean risk off, not a panic with a hedge. Do not forget, tomorrow is Nifty's weekly expiry, so today's fight at 23,000 sets where the week settles for tomorrow. 5 things I am watching to grade tomorrow. 1. Does 23,000 hold on a closing basis today or not? 2. Our domestics a desk makes it a 9th straight day of buying. 3. Does the FI short book finally start to cover on a bounce back, or they add even more? 4. Does the options market expectation of a movement jump above 16 of IV on a closing basis, and the likelihood is high? And 5. Does 23,300 cap every rally attempt that we see towards that 23,400 capped and 23,500 capped on Friday? So have a great Monday, guys. One important sell off, one short desk, and finally ready. One line to watch for, that is 23,000, that decides the week. And India, that still has the most room left to fall, has a sell on rise rally to be set up. 23,300 and 400 are those levels. Respect them. 23,000 as the narrative, and let the first 30 minutes sink you into the trampoline or the trapdoor. The data doesn't lie, guys, narratives do. But remember one thing, India is positioned well amongst its global peers, as we have not fallen down. So the thing is, we have already underperformed global peers, and that is what is to look for. So this is an opportunity for India to shine in, and that is what I think in this sell-off is going to happen, where we stay resilient amongst our global peers. This was the Tanmay Edge. If you find value in this, guys, please share it with one trader friend who needs it right now. Subscribe to Apple Podcast and Spotify, and listen it live on rupeecase.com, where it streams first, where you will guys also find the full scorecard and the numbers behind today's call. And give it a rating, guys, and review it if you want to add something into this podcast. Have a happy and a safe trading day for today.